Okay, Sean.
All right, thanks,
Frank, you
Scott.
guys are live.
All right, thanks, Scott. This is Sean McLaughlin, Chicago Sean. As Scott said, I'm joined by Frank Caberna from the Small Exchange. Frank, what's happening, buddy?
Hey, Sean. It's good to be here, man. Thanks for having me on today.
Cool. Look, this has been kind of a long time coming. We're very excited to have you here and excited to partner with the Small Exchange. I think it was over a year ago, more than it, almost 2 years ago, I attended a conference in New York where your CEO, Donnie, was giving a presentation, and man, it was just a nascent idea at the time, the Small Exchange, and I was blown away by it. Like, this is amazing, and this is what Trade Ideas customers have been looking for. So I cornered Donnie in the corner of the exhibition hall and introduced myself, and long story short, 2 years later, here we are, and it's finally coming to reality. So I'm very excited about this, and these products are definitely specifically designed for active traders, people who are day traders or swing traders. And if you have a small account, you don't have to commit a whole lot of capital to these trades, and you can day trade them all day long, regardless of your trading size. I'm not gonna steal any of your thunder, Frank, but thanks for being here and giving this presentation. And before I pass it over to you, Frank, I just want to let everybody know that we have a questions panel. And if you have any questions, go ahead and type them in. While Frank's talking, if I can answer it, I'll try to answer you back channel. If we have enough time at the end of this conversation, at the end of this hour, if there's enough time allowing, we'll go through and answer some of those questions. So don't hesitate to put questions in the questions panel. And with that, Frank, I want to pass it over to you. You've got the screen. Why don't you go ahead and introduce yourself and give us the show.
Yeah, thanks so much, Sean. Yeah, it's interesting you bring up that presentation that our CEO Donnie Roberts did about a year ago. It's hopefully for people who've been keeping their eyes on the exchange. It's been a short year or so since the idea to finally last Monday, the first day of trading in the smalls products. But yeah, it's been a long journey. We're very excited. We're very happy to finally be able to do webinars like this for a great platform like Trade Ideas with products actually trading. And I know the data is in your guys' platform, and we're real excited about that. But yeah, it's been a long journey to get here, and now I'm excited to tell people about what is going on with the Small Exchange, why they're starting to see something that's not stocks in their Trade Ideas platform. Starting out here, you can see we're the little hedgehog in the industry of bulls and bears. This is how we kind of view ourselves in the futures industry. These big institutions have long created a lot of these institutionally sized and institutionally looking products in futures, and we kind of find ourselves as being the little guy, the small guy, so to speak, here, creating products for individual retail traders, day traders, people who are using platforms like Trade Ideas. These are the first futures that you're seeing in your platform, because these are the first futures that are created for you. And so I want to get into a little bit of that with the presentation here. The Small Exchange's goal, mission, since Donnie Roberts started talking about it years ago, is making futures markets more accessible to more people. And this is a perfect audience for something like this, because maybe you've heard about futures, you've heard about different derivative markets, and they're either too big or they're too different, too hard to grasp relative to stocks that people are more comfortable with. But we feel that we're really starting to bridge that gap and make these markets that were initially designed for those big institutions accessible to the everyday trader. And so before getting into how the Small Exchange is remedying those old problems of institutional futures of the past, I wanted to kind of outline a little bit of the pros and cons here of those traditional futures markets, give a little background for what set us off into this mission. First up here, we're going to have three pros and cons that I'm going to lead with. The first one being that futures are a lot more economical than stocks and ETFs, but they're a lot more unwieldy. And what do I mean by this? I mean, economical in the sense of capital requirements, the money that you need to post to trade a product, but unwieldy in size. And capital requirements and size are two ideas that are near and dear to our hearts. Being the small exchange, we want both of those things to be relatively small, because futures, they have this small capital requirement, and that's exclusive to futures products. And so you might ask, why is Sean and the people over at Trade Ideas, why are they putting these futures in my pages that I'm used to just seeing stocks in? It's because they afford this exclusive low capital requirement relative to stocks that demand, depending on where you're trading, 50 to 100% in capital requirements. And so futures products, whether it's a stock market, a currency market, or a metals market, they're giving you this this reduced requirement to trade, a lower percentage of the product size. But when we get into that size, the problem occurs here. The con comes in that pro versus con for futures, because futures, given their design for institutions, tend to be a lot bigger than stocks. And so that's where that unwieldy idea comes in. While you're maybe getting a cheaper rate to trade futures, a cheaper rate doesn't really help you out when the product is 10, 20 times as big as that stock product that you're used to. Second up here on the list, I want to talk a little bit about futures and their greater accuracy to stocks and ETFs, but also their greater inconsistency. Now you might say, Frank, how can something be both accurate and inconsistent? And it is a little bit hard of an idea to grasp at first, but when you think about benchmarks and big markets like the stock market or a gold market or anything like that, futures are very close to those benchmarks. They've got maybe 1 degree of separation from a commodity or a financial instrument that you're trying to trade. Whereas stocks, they maybe have a couple more degrees of separation in that. And this is what we like to call in the futures world pure exposure. And futures are, they constantly tout this pure exposure relative to a stock market that, might get close to gold, but at the end of the day, you're probably trading a company that deals with gold, not the commodity itself. On the other side of that, you've got characteristics here in futures that differ from asset class to asset class. If I'm trading, foreign exchange, or I'm trading energy or equities or anything like that, they're going to have different tick values. They're going to have different expirations. They're going to have all these intricacies that differ from product to product, making it very hard to jump from asset class to asset class, where this is where the, kind of standardization of stocks is very helpful. And a lot of people will give up something in the way of pure exposure or, great correlation to an asset class for that simpler, ETF shares, stock shares, everything ticks in those pennies, and you know what those pennies mean. Whereas, a quarter in this future relative to a penny in that future relative to a dime in that future can be very different and can be kind of a barrier to entry in the futures industry. Finally here, I want to hit on our last pro versus con before getting into how the smalls are working to fix and reduce these barriers to entry. Dynamic versus confusing. Now, futures have long been a more dynamic medium for trading, in that you can jump from asset class to asset class, but a little confusing sometimes when you're within that asset class. Now what do I mean by that? In futures, you can jump from energy markets to interest rate markets to foreign exchange, metals, and stocks, major asset classes there, when at the end of the day, you're trading mostly stocks if you're in even exchange traded products or anything like that. And so it's nice to have that dynamic nature, different markets that have lower correlations or no correlations at all, and get a different take on whatever measurement, whatever strategy you're using, aside from, if you're trading primarily stocks, if the stock market is up 1% or 2%, most of the individual stocks that you're looking at are probably hovering somewhere around that. So you've got that dynamic nature here in futures, these different asset classes to jump between. But when you put the magnifying glass on a market like foreign exchange, something happens here that might be a little bit too much. This is the argument of, not enough in stocks. I want to trade euro and Mexican peso and these different FX markets with easy access, but sometimes it's a little too much when, say, I had an idea on the US dollar and now I have to pick between all of these. And this is, something that people constantly battle with is, okay, I want to break into futures, I want to break outside of stocks because I have an idea on foreign exchange, but now I have to do a bunch of extra research aside from my initial idea just to find the market that best fits me and best fits that idea that I thought was just on the asset class itself. So what we're doing here at the Small Exchange, finally getting into our products and how they are working to build that accessibility, is we're pairing that efficiency of futures with the ease of stocks. It's no more this or that, no more pros versus cons. We are taking that capital efficiency in futures and we're paring back a little bit of that size, and we're borrowing from the stock world's simplicity and standardization to create the smalls, a futures product, definitely by nature, but one that's going to look and feel a lot like stock products that you're used to trading. And so here are the three pillars of the smalls: small, standard, and simple. And so this is what is working to fix all of those pros versus cons. Efficient capital that can be tailored to any account size, universal construction that tracks directly. That's that pure exposure there, but not at the expense of different sizes and different ticks and different specifications. And then also clear context that accelerates ideas to execution. No more, I had an idea in foreign exchange, but when I Googled foreign exchange futures and they gave me 20 different ones, I don't know which one that idea lends to best. So I want to dive deeper into each of these three and show how we are small, standard, and simple, but also give you a little taste for each of the markets. We're going to touch on stocks and foreign exchange and metals, and then also at the end talk about what's coming next. But first here, starting with smalls, that efficient capital that can be tailored to any account size. Getting back to capital requirements and size, here are the numbers that you usually see in futures relative to stocks. Futures will usually tout a capital requirement between 1 and 25% of the product's value, whereas stocks, depending on when you're trading, will usually demand 50 or 100% of that product's value to buy or sell it. Now, that's going to range from product to product. Products that are less volatile, that move around $1,000, $100,000, even some products that are north of that value. And after crunching it, see that one, a lot of people don't want a product that's got $100,000 in exposure, but two, even at those efficient rates, that 1 to 25%, that multiplied by a product that's $100,000 or $200,000 is still a price tag that a lot of people can't get along with. Now, what the smalls have done is they've combined these two ideas of the futures and the stocks. We want that lower capital requirement, those margins that are dictated by span margining that get us, they evolve on a daily basis actually with movement in the market to give you a very true cost, a very true measure of what the market is doing on a daily basis. But we also want the smaller size of, your shares of Apple, Amazon, and the rest. So what we did here is we took that 1 to 25%, we attributed it to products that are between $1,000 and $20,000, and that's going to get you to, I think the average this week It's only the second week of our products trading, but of the 3 products that we have out there trading, I think one costs about $150, $200 to trade in terms of margin from the OCC. Another one is around $300 and another one's around $400. We're trying to get all of these markets into a sweet spot whereby they have enough movement, they've got enough size to kind of make it worth your while, but they're not breaking the bank to get into those markets. And so now I want to hit a little bit more on this size piece with an example in equities. So here, the first thing you're going to see, that black line is a traditional futures market for equities. It's actually S&P 500 futures. And what you're seeing is huge changes in product value, $1,000 movements on a daily basis. And then when you break that out to multiple days, you could see 10 grand, 20 grand in a matter of a week or two. But yeah, intraday, I think the S&P right now is moving between 3 or 4 grand. And then you look at that red, that's our stock market here at the Smalls. And it looks a little bit like a flat line, right? But when we break this out a little bit, you'll see what's actually occurring here. Very similar opportunity to that broad S&P 500 market, but at a much more manageable cost, something that's bouncing between $2,000 and $6,000 with, on a daily basis, $50 to $200 worth of movement relative to the bigger product that's moving thousands of dollars per day. That's that size piece here in equities. And you can see here, these are the numbers as of the last few weeks. Traditional stock futures moving on a daily basis about $3,600. The small stock 75 moving about $135. And this isn't to say that there's less opportunity. Actually, the small stock 75 moves on a greater percentage basis than the S&P 500 and other major stock indices. But we're trying to pair that greater volatility on a percentage basis with smaller notional moves that fit everyday traders, that fit retail traders like yourselves. $3,600 on a daily basis is a lot for professional traders, anyone really. Then this is going to be seen throughout the product suite here at the Smalls. A small precious metals market here that's moving about $85 per day relative to other metals futures like gold futures that are moving north of $2,000 on a daily basis. Moving on, you see the small dollar foreign exchange product here at the small exchange moving about $70 relative to currency futures like the euro, British pound that move close to $1,000 per day as of recent movement. And this also is going to break out to products that we're currently looking at deploying in the very near future. Crude oil, a market that people constantly talk about, that they want to gain exposure in and see those whips back and forth. A market that on a percentage basis is moving around a ton. Our small global oil market will move around a ton on that percentage basis relative to other crude oil markets, but something that is prone to these traditional futures markets that keep people away from trading crude is $2,200 a day. Not really manageable for the everyday trader. And then finally, we are going to have a 10-year US Treasury yield future here. What's great about this is that it's going to tick in yield, which is going to be easier for the everyday trader to kind of understand. No more weird, clunky Treasury note and bond prices and what those translate to in yield. But they're also going to be smaller with this $80 move per day relative to 600 or even with the bonds in Treasury futures moving about $1,000 or even more per day. So yeah, that's that size piece here with small, and the whole idea is to reduce that size to allow for scalability. If you want to get up to $300-$400 in risk with a couple of contracts, that's totally doable. But we're trying to afford that opportunity at any size, reduce that barrier to entry with big, clunky, traditional futures. Moving on to the second pillar here of standard. This is touching on that universal construction that tracks directly. So getting back to that tracking directly, exposure here in our gold example, our small precious metals market that you'll see in a second here. What often happens when you try to trade gold with stocks is you get a stock that is in the gold sector. It mines, it explores, what have you, relative to metals, but it doesn't track that gold price like you had hoped. And, you know, it's this idea of trading the bars of gold, silver, and platinum, not trading these companies that handle those bars, that degree of separation that gets you there with a company that has a CEO, an operations department, quarterly earnings relative to how they're performing, how they are mining for gold and other precious metals, how they are exploring and all those things, not necessarily the price of those gold bars themselves. Now, here's going to be an example of movement in precious metals. This red line here is just the percentage movement of gold, silver, and platinum put together in a basket. And I want to throw some of these single stocks and ETFs on top of them. And you're going to see a big variance here. You know, it's one of the most frustrating things, having been in the industry for a while here and dealing with, you know, everyday traders who want gold exposure, who want exposure to different energies, and they end up buying, you know, an XME, which is an ETF here, and GDX, which is a gold miners ETF, and then NEM, which is Newmont, pretty much considered kind of the Exxon Mobil of the gold industry. A real frustrating thing is someone who thought they were getting gold exposure, thought they were trading precious metals, but ended up trading one of these companies or a basket of these companies that diverged greatly from that price. And another funny thing here is GDX and XME are both ETFs. Their largest holding is actually NEM, this Newmont stock, which, like I said, is like the Exxon in the metals world. And you're seeing variations just between those two ETFs of 40% in this time window, which I believe is, I think, the last 6 months to a year here. And then that stock itself, you know, up 40% itself relative to precious metals, you know, bouncing between up and down 10%. Now I want to show what our index and the futures that trade off of that index do relative to this basket of metals. You can see here that it's right on top of it. This is pure exposure here. If you came to trade metals, /SPRE is that metals market. There's no, you know, stocks that we're using in place of those gold, silver, and platinum bars. It's the bars themselves that these futures are tracking. So nothing lost in the way of exposure. But here's where people often get lost. You know, it's nice to go to the futures world for that pure exposure, but if I'm getting pure exposure in energy and metals and these different currencies, why do I have to have a barrier between going through them? Why are there different contract specifications, different characteristics for each of them? Well, at the smalls here, we have all these different asset classes, but they're all going to abide by a single set of contract specifications. No more learning all these different specs, these different pieces of information that don't actually help you trade. And so moving through a couple here, you're going to see, you know, different tick increments, different multipliers. I started out trading at the Board of Trade in interest rates, and myself and everyone who sat there next to me had scribbled out somewhere, you know, the different multipliers, the different tick increments, because even within the interest rate world, you had products that had, you know, a single tick, half of that tick, a quarter of that tick, and then also the 2-year and the rest of the treasuries in the treasury world, different multipliers as well. And that's within the asset class. When you try to jump from metals to equities to foreign exchange, you have these different tick increments and these different multipliers here. It's all too much. And the smalls, one of the first things that was nailed in before we looked at developing any products, they all must have the same look and feel. They all have that penny tick, and they all have the same multiplier of 100. And so what you're going to see is a uniform tick size across all products. You know, no more dimes that equate to $10 or quarters in equities that equate to $12.50, or half of a 1/10,000th of a penny in foreign exchange products that equate to $6.25. All smalls, 1 penny, $1. That's the tick across every single asset class there. So definitely reducing a little bit of that headache. I mean, I don't know how many times I've had to go to different contract spec pages and read up on all this stuff after having done research to get to trading the market that I wanted to trade. It doesn't put $1 in your pocket learning those different contract specifications. Another thing that doesn't put $1 in your pocket is knowing when different futures expire. In the stock world, you don't have any of these expirations, and it definitely can be thought of as, you know, a burden. Why would I deal with that expiration? Well, we just talked about that pure exposure and that efficiency and capital requirements, but we wanted to make this as simple as possible for metals, for interest rates, stocks, energies, foreign exchange, all one expiration, the third Friday of the month. Every futures contract is going to have an active month expiration and then the next month as well. So that's 12 expirations throughout the year, all occurring on the third Friday, as simple as possible. And if you're trading any of these markets, you're just going to want to be looking at that active month, which I'm sure the Trade Ideas platform defaults to. And yeah, no more marking up your calendar with a bunch of different stuff. Everybody's busy enough already. Don't need different places on your calendar for foreign exchange and metals. All one expiration here in the smalls, because we want you to spend time trading, not studying. We have a lovely website with a bunch of information that I'm sure we'll touch on a little bit later in the Q&A section, but you know, we don't at the end of the day want you spending too much time there. We'd rather you be spending time in your platform trading. Now, the final piece here of the presentation before getting to a couple uses for the smalls is this simple piece. I wanted to get into the products themselves and show how they give you this clarity of context that makes it, you know, as quick as possible to get you from an idea to an execution on that idea, and not have to spend time Googling or figuring out the best product. The smalls are trying to be that one-stop shop for all of these different asset classes, because while it's nice to have this dynamic nature, you know, the stocks bubble here in gray, you've just got, if you're looking for, you know, an energy stock, it's still at the end of the day a stock. If you're looking for a metal stock, it's still at the end of the day a stock, and they have, you know, somewhat of a positive correlation there, where you've got, you know, real energy markets and real metals markets that don't really have a correlation with each other or the stock world. And that's nice. But getting to this foreign exchange example that we talked about earlier, traditional futures, all these different products here, you know, you wanted to go from the stock world to trading the US dollar or just currencies in general. And it's now a game of, okay, should I be trading the yen? Should I be trading the Mexican peso? Should I be trading the Canadian dollar? What's the difference between the Canadian dollar, a commodity currency, and euro and the British pound? They're not commodity currencies that don't take any leads from gold or oil or anything like that. It's all too much research on top of the research that you're already doing, the strategy that you've already put together. The smalls across all of these different asset classes are going to get you directly to that market. The concept behind each of the products within these different asset classes is the simplest form that it possibly can be. Starting out with this foreign exchange idea, small dollar connects you directly to USD while diversifying against the world's 7 largest economies, so you no longer need conversions when trading foreign exchange. This is a dollar forward market that is diversified against those different commodity currencies or those different European currencies, or, you know, the Japanese yen, or a new market like the Chinese renminbi that not a lot of futures or ETFs can get you exposure to. But yeah, at the end of the day, it is the dollar. If you've got an idea on where the US dollar is going, you go right to this product and you don't have to worry about sifting through the you know, the small differences between euro and British pound or any of the other ones up there. Small Stock 75 finds the most dynamic stocks from the 5 major sectors and adjusts with shifts in the equity environment. So you stay trading an active stock market. This is a new kind of stock market here, in that, you know, it's small, it's got the smaller size, it's got the smaller capital requirements, but it's not just, you know, a smaller version of the S&P 500. It's 5 sectors, and the weightings throughout those sectors and the stocks within those sectors are very evenly distributed. So you've got something that, doesn't get top heavy with technology and just falls at, the whims of what tech is doing on that given day. This is something that if energy is moving around, the stock market's going to move around as a function of energy. So it's got that small, it's got that standard, but here in its design, we feel is very unique. It gets you directly to, a holistic gauge of the stock market. As you can see these days, the S&P 500 and the NASDAQ especially, might as well be kind of tech sectors themselves, as they, I think, vary between being, I think the S&P 500 is maybe 30% tech, and I'm pretty sure the NASDAQ is more than 50 or 60% tech now. We want all of these different parts of the US economy kind of shifting around this stock market here. Then moving on to precious metals. Metals been moving around a ton this week, actually recent weeks here. Something I've definitely been keeping an eye on. This product will combine gold, silver, and platinum relative to their consumption, production, and volume. So you trade the developments that matter most in a changing metals market. One of the things that's real tough when you do get into this metals asset class is choosing between gold, silver, and platinum. And if you watch them individually, though they're all precious metals and though they have a high correlation to each other, there will be plenty of days where silver will be red and gold will be positive. And it becomes, once again, this game of too much in the futures world. It's nice that I have access to all these, but which should I be trading? This one puts all of them in the same basket and then also weights them according to consumption, production, and trade volume. I think currently this index is about 50% gold and a little bit less there is silver, and has a little platinum baked in to give you a holistic view of the metals market, but also something that jumps around. If gold is flat on the day and silver is really moving, this index will move, and so that's an interesting one I'm definitely keeping my eye on. In the near future, we're going to be rolling out Small Global Oil, which blends major crude oil benchmarks from the US and abroad to reduce geographic bias, so you can simply trade oil. Once again, this game of which one do I trade? Do I trade Brent crude oil overseas, or do I trade WTI here? Even if you get down into the minutia of different US crude oil benchmarks, there's plenty there. We're mixing them all together, make this blended oil product almost that isn't privy to news that is exclusive in Europe or news that's exclusive here in the US. You're getting tastes of all of it to just give you, a simple view of crude. You want to trade crude, this is how you get straight to it without having to worry about those geographic biases. And then finally, as someone who came from interest rates trading myself here, this is really near to my heart. Small 10-year US Treasury yield that cuts out the complexities of bond pricing and takes you straight to the yield So you can skip the calculations and just trade interest rates. No more fractions, no more, something that's 170 apostrophe 03, and that 03 isn't even 300ths, that's 3/32. No more of those fractions, no more worrying about coupons or DV01. I don't know how many times I've had to look up DV01s to see, which of these products is moving relative to yield. This is just yield forward. You're looking at, these different news mediums, or you're looking at today, the Fed had a meeting and they come out and they announce where they're setting short-term yields, where they're setting short-term interest rates. They're not coming out and quoting to you some price of a product. And so we want to keep you in the world of yield and strip out all of those complexities of bond pricing. And so, yeah, that wraps up the third of our three segments here, simple, so that you make one right turn towards the smalls and not three left turns to get to your trade. No more having to do studying on top of your idea generation to get to a trade here at the smalls. And to summarize here, small exchange futures, efficient capital that can be tailored to any account size, universal construction that tracks directly, and clear context that accelerates ideas to execution. And these have, from Donnie 2 years ago giving presentations on the smalls to now, every decision we've made has been with new traders and existing traders in mind, but still at the end of the day, just everyday traders in mind who are looking to try affordable products and looking to scale trade ideas. It's really designed well for someone who's looking for a taste of futures and what they have to offer in exclusive details like low capital requirements and pure exposure without having to, jump through hoops to get there. So we've always kept those two in mind. And now quickly before we get back to Sean and some tentative questions, don't want to run out of time. I wanted to speak a little bit to how these products are used to speculate on the short term, invest in the long term, and also hedge portfolios of any size or asset class. And I know that most of you are probably living in this world of speculative trading, day trading, getting in and out of positions as quickly as possible for profits, hopefully. These are markets that here with the SFX example, this is our foreign exchange product, the small dollar. Now, if you bought this low here of 152, call it, and then sold that position around, just call it 156 for simplicity's sake, in foreign exchange, that's actually a pretty big move. On a percentage basis, that's only a couple percent, but that's a big move in FX, a market that's usually kind of cast aside as being boring. But with futures capital efficiency, this short-term speculation of just a move from 152 to 156 relative to current margin would have yielded a 200% return on capital used. Now, if you go over to FXE or UUP or any of these ETFs that try to mimic foreign exchange markets, since they demand 50 or 100%, this big move here in FX would have only netted you about 2.5 or 5% in return on capital. That's what we mean when we talk to capital efficiency and how that helps the day trader, the short-term speculator in markets like foreign exchange. And while this is probably the biggest example of that, because these are markets that are less volatile than stocks and commodities, it's true for all these different markets. The efficiency of the small stock 75 relative to Apple stock shares or S&P 500 ETFs, it's present in all of those relationships. And then also from an investment basis, you're going to see a very similar idea here, which is the potential for larger returns on capital. Whereas your stock investment might move up or down on a yearly basis of 10 to 20% relative to the money you put up. Larger jumps, larger potential for returns on capital with a stock product like the small stock 75, given its futures nature there. And then finally, speaking to hedging, with the small size and capital efficiency of the smalls, if you have a portfolio of stocks or metals or exposure in anything, makes it very easy and simple for you to go in there and reduce risk when you want to for very efficient capital requirements, very low capital requirements, and then come back and buy back that hedge without having to uproot any of your 401k or wherever you have money invested. So for hedging purposes, and this is a metals example here, but also works in stocks. Prior to the sell-off of early March, very easy for you to go in there and sell an SM75 contract, reduce some of that exposure you have in various portfolios, various long stock portfolios, and then buy it back when you think the risk has dissipated. And then finally, here is our subscription offer to the smalls. This is a very unique offer that if you have traded a lot of futures, if you have looked at a lot of different futures exchanges, you probably haven't seen anything like this. And if you haven't, just know that this is a very unique offer, a one-time payment of $100, giving you a lifetime of discounted exchange fees and reduced market data fees. Now, market data fees to see the smalls here are going to be 0 for the first year, and they're only going to climb. we're not trying to inhibit anyone from trading, so we're going to try to keep those market data fees as low as possible. But to lock in a lifetime of reduced exchange fees and market data fees, this subscription's very interesting. Go to subscribers.thesmallexchange.com for more information on that. We've got a video of our CEO, our fearless leader, Donald Roberts, talking about the subscription and its uniqueness. But yeah, it's a cool one here, whereby you can save every time you trade the smalls. And I already alluded to the fact that we're planning on coming out with an oil product as soon as we can, and an interest rate product as soon as we can, continuing to come out with more products down the line. We've got meetings over here daily talking about developing new products. So, you'll save on the current suite and everything that comes in after the fact. And yeah, it's a very interesting offer there, and so please check that out. But yeah, that is all I've got for my presentation. If Sean, you want to take the reins here, and we can hopefully answer some questions and look at the Trade Ideas platform with these the first futures products here at Trade Ideas.
Frank, thanks, man. That was great, and I can tell you that I recently completed all the paperwork to get my $100
Awesome.
one-time payment through to you guys, so I'm all good.
Awesome, man. That's great to hear. That's great to hear.
Yeah, and you talked about it a little bit in your presentation. There's more to just speculative trading, intraday trading with these products. There's a lot more you could do, and I'll tell you, my purpose really is I trade a lot of S&P options, and I'm looking into trading the smalls to hedge my delta risk. So lots of different ways to use these products. So that's very exciting. I see some questions that have come in, and there's some really good ones. We will get to them in just a moment. But before we do that, I want of what the small exchange products look like on the Trade Ideas platform. Frank, can you see my screen now? Am I sharing it?
I can, Sean.
We've added a small exchange. You can see trading, as Frank mentioned. Right now, they've just launched with the small stocks futures, the precious metals futures, and the small dollars futures. These are the June contracts, and we got a couple July contracts down here as far. As Frank mentioned, oil's coming, bonds are coming, and I know Donnie's teased some other cooler exotic products down the road. So,
oh yeah.
Yeah, so when they arrive, they will be right here on the platform. And I know one question that came in, somebody was asking about the volumes of the product. And you can see right here in my top list, we got some data about each contract. You can see the total volumes here. Now look, we're not talking about hundreds of thousands of contracts trading today, these products. And not only did they just launch last week, but right now, and Frank, you could correct me if I'm wrong, but you guys are still, more and more brokerage platforms are in the process of adopting and making the products available to their customers, but it's not available widely to everybody yet. Is that correct?
Yes, sir. Yeah, I want to, it's not part of the presentation, but definitely something we get constantly is a question of liquidity and volume and bid-ask spreads. And it's, we feel like it's been a great start here. Yeah, this has been day 8 of trading and getting up to almost 1,000 in that small stocks product. We feel has been a great start. A lot of, if people don't know the recent history of exchanges coming to market with new futures products, if they weren't named the CME or some of the other big boys, they tend to do a couple contracts a day and then, hopefully pick up. But for the most part, those new exchanges tend to fall off to maybe 0 contracts. We've been building in volume here, and a lot of us over here, Donnie, Pete, some other people that Sean, but maybe some of the people on the webinar don't know, constantly on the phone with new market makers, new brokerages to get retail volume in there as well. We've got Jump and Citadel behind us making markets in there, and also just investing in our company to promote the trade of these smalls as well. So yeah, that it is day 8 here. We've gotten a lot of feedback on the liquidity, but it is growing, and we're trying to tighten up those bid-ask spreads every day, and yeah, getting those volumes to a couple hundred to a couple thousand, and then building beyond that. So yeah, it's something that yeah is honestly kind of the big push
Sure.
for the people on the ground here at the small exchange, aside
Well,
from product development itself, you know.
yeah, and the good news is that despite the lower volumes, at least currently in the metals and the soft dollar, they still have pretty tight bid-ask spreads for that amount of volume. So it's not like you're going to put in a market order and get crushed on a terrible fill. That's not the issue.
Yeah,
So
we've looked at we've got my friend Anna over here. She crunches a bunch of the numbers, and she's been looking at average bid ask spreads, and especially between, you know, we're only trading from 7 a.m. Central to 4 p.m. Central, looking at adding the 23 hour a day time frame that traditional futures trade with. But she's been looking at those average bid ask spreads between, especially 8:30 Central when the U.S. stock market opens, and 3 p.m. Central. And in the stock product, I think the average is a couple pennies, and then it gets out to 5 or 6 pennies in metals and dollars. So yeah, this isn't a scenario where, yeah, it's 100 contracts traded and the bid offer spread is 50 cents or $1, which would be $50 or $100, and you're getting, you know, you're out $25 before the market even moves.
right, right. So a couple of things here I want to point out on this small exchange channel for Trade Ideas subscribers. And by the way, if you're not a subscriber, I put in the chat window there in your GoToMeeting panel where you can a link where you can subscribe if you're interested. But a couple of things I want to point out is in the alert, we've got a couple alert windows here. These windows are just the default ones are showing you when each of the contracts are making a new high or an intraday low. So if I click on this is the small dollar futures, or this is one of the lower volume ones. Let's go back to the precious metals. You can see here, this is an intraday chart. The blue arrow points to where this alert happened, the timestamp. I'm in the mountain time zone, so this was 101 mountain time, about an hour before the regular trading hours close. And you could see right there where that blue arrow points to, that sure was an intraday high. And you can get alerted when any of these contracts make a new high, or in this case, a new low that you see here in red. The other alert window that we created, and these, by the way, these are just examples. You can use the full suite of alerting tools and the appropriate filters that are available within Trade Ideas to create any alerts that you want that line up with your goals and your trading strategies. But this one here is this is for people who want to maybe get into trends, but they want to get into them on a pullback, right? So this alert here that came in right before the close shows these are 5-minute candles. You can see that the stock has been in an uptrend, or not the stock, but this metals futures was in a contract and an uptrend, and it had a quick pullback there. It satisfied the 25% intraday range pullback, which gave you a trigger. And so if you were opportunistic, you could have maybe bought this dip and made a little profit. That might not be the best example, but that's just one. Let's see if we can find some more of the active ones. Here was you got alerted. This is the metals earlier in the day where there was a pullback off the lows, so you could have got alerted. Anyway, these are just examples. And the coolest thing that we built in here is this compare count window. So for those of you who are trading the small 75, which is the contract with the most volume right now, and it's, you know, stock traders are definitely very interested in this product. We built a compare count window that is comprised of all of these 75 stock components that make up this the index of the small 75. And so you can get a look under the hood of these stocks, of, you know, of the 75 stocks, which ones are making new intraday highs, that's shown by the green line, and which ones are making new intraday lows with the red line. And that can give you some, you know, maybe an early clue that there's a direction about to, you know, maybe the contract's going to change direction. So if you're intraday trading, you might get a little heads up on a move. So really cool tool. Sorry.
Yeah, that's awesome, Sean. Yeah, especially in the early days of trading here, you'll see a lot of wiggle of these futures around the 75 stocks that make them up. So that's a real cool tool you got there.
Yeah, and this is not really returning a whole lot of data now because the markets are closed, obviously.
Sure.
But intraday, this can be a really useful tool to give you kind of a heads up at the, you know, the winds are changing, perhaps give you a little advanced notice. So this is the channel, like I said, it's available to anyone in the Trade Ideas platform. And for those of you who are looking to build your own top lists or alerts in Trade Ideas using small exchange data, I'll just right click in this top list window here. In any window, you could right click and hit configure. And if you go to the exchanges tab, this is where you will see the small exchange listed. So you just go ahead and choose that small exchange, you just make it active, and that's how you'll ensure that you're getting small exchange data in any of your alert windows or top lists. And coming down the road, for those of you who use Brokerage Plus to trade, we still have to work out some kinks on that due to the differences in the tick value versus a stock. But you will eventually be able to send trades from our Brokerage Plus module, which can be pretty exciting for a lot of people. And since we're talking about Brokerage Plus, we did have some questions that came in about which brokerages that can trade the products right now. For sure, Tastyworks, of course. I think Interactive Brokers is coming online pretty soon, which is the one that we connect to for Brokerage Plus for now. Hopefully we want to bring more on, including Tastyworks. So Warren had a question there about can we trade small exchange products directly from Brokerage Plus right now? And the answer is no, but that's coming. And hopefully when we get Tastyworks on, that'll be even better.
Yeah, no, that sounds great. Yeah, we're onboarding a bunch of different brokerages, so we hope to get that Brokerage Plus moving soon. But yeah, there's also a page over at our website under the member tab at smallexchange.com where you can see a list of firms and accessing the smalls. So yeah, Brokerage Plus working to get that on there as soon as possible.
Awesome. Frank, there were a couple people that were asking about options on these products. I know there's not options available now, but can you speak to what the plans are in the future?
Totally. Yeah, that is something that I hear about on a daily basis here in the offices. It's, I don't know if anyone knows Tom Sosnoff, who's an investor in this project, and it's an idea that him and Donnie Roberts came to. Huge options guy, and he's been, before we even launched it, he wanted options launched the first day of trading, but unfortunately that is not how the different regulation entities look at it. So we are putting together forms and everything on a daily basis here to get options on as soon as possible, because yeah, it's going to add to the trading, it's going to add to the liquidity of the outright, people trading the options against the outright and vice versa. It's something that we are trying to get on as soon as possible.
Awesome.
It's that and the 24-hour or the 23/5 trading of traditional futures is we celebrated for like 10 minutes on our launch last Monday, and then it was instantly, all right, when are we getting options? When are we getting 23/5 trading?
Yeah, well, I know that a lot of people like to trade options, but also just the fact that when there's options available, that tends to bring more volumes all around because people can start hedging their positions better and all that. So that's good. Another question that came in, and this is the last one, I think we've covered all of them. There are a lot of people asked a lot of the same questions, so we kind of hit everybody with one answer. But there was a good question here about the taxing effect. I don't know how versed you are in the U.S. tax code, but this guy was asking if the smalls fall under section 1256 of the U.S. tax code for taxing purposes.
That is something that I am not privy to. I would guess that's somewhere in our info hub at thesmallexchange.com. Yeah, sorry, I should have gotten an accountant or someone to back me up on this webinar here, but yeah, I that's something that I would either dig into on the website. You can email me individually at frank@thesmallexchange.com, and I can push you on to our support, or you could email support@thesmallexchange.com, and they'll have those answers for you. Yeah, right. I have not brushed up on any tax or accounting anything since senior year of college, so I'm sorry about that.
Well, I'm guessing here, but I'm going to guess that that section 1256 of the tax code refers to the 60-40 treatment of long-term gain and short-term capital gains for futures. I'm going to guess that's what it's related to. And do the smalls fall under that? We don't know, but it is like Frank said. I'm pretty sure I've seen it mentioned on your website. So
Yeah,
smallexchange.com.
if it's something that's pretty common in futures, in the futures world, I would say there's a 99.9% chance that it does fall under that, because yeah, these are futures products, and a lot of that back office stuff falls under the same as any other futures contract.
Okay, we got two more questions here, and I think we'll wrap it up with these two, and they're both good questions. Austin's asking, he wants to know if you could explain this better. Average cost for a futures contract, and he gives an example. So if you were to buy the E-mini S&P, well, we're not talking about E-minis here, but if you were to buy an E-mini S&P for 30 and it's priced at 71.73 or 31.73,
Sure.
does he play 31.73 plus fees for a share? No, that's not how it works with the smalls.
No, yeah, it's so that would be kind of like if you were trading the index, the E-mini S&P 500 futures. There, the 3173 is actually, the product size is 3173 times $50, and so after doing that math, then you need to find the margin, which is I think currently around 9 or 10% of that. So to buy a contract of the E-mini S&P 500, you multiply the price times the multiplier, which is $50, times the capital requirement percentage, which is I think around 9 or 10%. And so that gets you to a number that I think is almost around 10 grand to buy or sell one of those contracts. It's similar math with the small stock 75, but it's simpler math. The small stock 75, if it's priced at $50, the multiplier is simply just 100, so that's a $5,000 contract. And at that, 9 or 10%, let's just call it 10%, to buy that contract is going to cost you $500. But you're still getting the efficiency, or the word that some people use, the leverage, comes in the fact that it's $500 to buy or sell a contract that is worth $5,000. And so, yeah, that's the math on that. But depending on your brokerage, these numbers move. Tastyworks and Interactive Brokers, some of these places have some very low fees to trade stocks, options, or futures. From our side, the market data fees free to view these products, as I'm sure you know, Sean, and then also the exchange fees to trade a contract is about 15 cents. And then also, if you have that subscription, each of those contracts is going to be only 7 cents to trade. So definitely trying to, as cheap as we can make it while keeping the lights on here.
Well, that's been the MO with the whole Tasty Trade, Tastyworks, Doe clan since day one. So that does not surprise me at all, and everybody appreciates that. Last question off here. Brandon had a question, and I think he's going to like the answer. He asks, when you buy a contract, how long can you hang on to it?
When you buy a contract, you can hang on to it, up until expiration. The futures contracts, they do have an expiration here, but overnight, as long as you are looking to hold that contract, there's nothing weird that's going to go on there. And while expiration seems like a strange thing in and of itself, all these futures are cash settled. And what that means is, similar to anyone who's traded options or anything like that, when expiration hits, you are either, in your account, you see money come out or go in equivalent to what you made or lost from that contract and that position. So there's no expiration. I know a lot of people are worried about, especially energies and metals expirations, because they don't owning a bunch of bars of gold or a bunch of barrels of oil. These are cash settled products. So, you know, in that small stocks example, if you bought $50 and you forgot about expiration, or you just were going to let it go to expiration anyways. If the market's at 51, then you just made your $100 and it's cleaned up for you. Nothing to really worry about there. And same to the downside there. Your losses get booked, and that's the end of it. But we are looking at new technology to make what's called rolling very quick and not a headache for people, which would be, you know, if you're long the July futures of the small stock 75 and you want to just be long into perpetuity, there's hopefully going to be just a little box you check that auto rolls those contracts, so that it almost is like, you know, owning shares of Apple or whatever for as long as you want. So yeah, that's all the background on that. That's hopefully evolving to, you know, like we like to say here at the Small Exchange, a simpler end goal for all the traders there.
Well, Frank, this has been great, super informative. I know people are really excited to start trading these products. I put the website up here for anybody who wants to get more information. It's simply thesmallexchange.com. It's a really easy to navigate website with all the product info and market info you need. Frank, thanks for doing this, buddy, and we're very excited to partner with you guys. And you know, our customer bases have a lot in common. We're all active traders. We all want to manage our own money, and we all want to keep trading as simple and as easy as possible. So we're like brothers from another mother.
Yeah, man, Sean, thanks so much for having me on. We love what you guys are doing over there at Trade Ideas. Honestly, we really like your platform and everything, and we're real happy to be the first futures on there. This is real exciting, man. So yeah, if you guys ever need anything else from me, more webinars hopefully coming down the line, and you can also email me at frank@thesmallexchange.com. You know, we're very transparent. Hopefully I can help you with whatever you need.
Cool. And also, we're both on Twitter, so if you want to reach out to Frank on Twitter, you're Frank_Caberna. Is that right?
Yes, sir. Yeah, you and I have been circling. It's funny that we finally got to do this, because you and I have been circling each other on Twitter for a while now. So yeah, yeah, hit me up on Twitter or the Small Exchange Twitter. You know, my email, the support email. We are designing these products for you, and we're definitely going to keep you in mind every step of the way, not leaving anybody out to dry here.
Awesome. All right, Frank, we're going to end it. Frank, why did I call you? I wanted to call you Francis there for a second. I apologize.
Totally. Whatever you want to call me, Sean. Doesn't matter to me.
All right, Frank, this was great. I'm going to cut it out here. Thanks again. And everybody, we'll see you around the bend at the next webinar. Take care, everyone.
Thank you.
Bye-bye.